What about those rumors of depreciation and home prices dropping?
Welcome to your Money Monday.
Welcome to session 325, brought to you by the Motts team with Cutler Real Estate. Things are way different this time, folks. The length of the crisis is different from last time. On this first slide here, the years it took for unemployment rate to recover from its pre-crisis percentage. It was over 6 years. The red mark right there is indicating it was 6 years unemployment rate was greater than 6% for 6 years. And the recent crisis that we did, it just went up. You see the black line there? It just went up quickly, and within a year and a half, we recovered. So crisis is way, way different. Not 6 years long, a year and a half long. So take that in effect with things. And here we go. So home price forecast for 2022 is at like 10% increase. And that's taking the biggest experts out there and putting them together and combining the average at 10%. And recently we've been like 20% increase in prices. So there's a big difference you're gonna see there. That's the truth there. So housing inventory, there's both good and bad news. If you look at the good news, active listings, there's 30% more, over 30% more active listings compared to July of 21. However, the bad news is there are still over 44% less listings compared to July of 2019. So you gotta look at the right measurements there to find out how bad the supply really is. So good news is there's more listings coming on the market. Bad news is we're still far cry away from getting there. If you look, there's not enough homes for sale here, folks. You're looking at, 10 months of inventory at the peak when it was really bad. And you can see where we're at now is way down below, and it's still a strong seller's market at 3 months there, okay? So the month's inventory of homes for sale, you can see right here that today nationally we're at 3 months, and locally in Northeastern Ohio, we're at 0.065 months, which is way down into seller's market still. So we're a long cry away from it, things changing. We're still strong seller's market. Mark Zandi, the chief economist for Moody's Analytics, he actually says, I don't think national housing prices will decline in a meaningful way, but there will be some price declines in the country, and those are going to be in the overheated markets where things were going nuts. Okay, another thing, annual home price growth dropped by 2 percentage points, okay? The greatest single slowdown on record since at least the early 70s. So this is where you're hearing it, folks. While the slowdown was record-breaking, it went down 2 points. Home price growth would have to come down, decelerate at this pace for 6 more months, which we know is not going to happen to drive annual appreciation back to 5%, which is healthy. 3 to 5% appreciation is healthy. We're just crazy over the moon right now. A rate more in line with long-term averages, okay? So here's what happened here. The appreciation is slowing, not depreciating. That's the whole thing. Appreciation is slowing, it's not depreciating. Okay, so we went from 20.2 to nearly 18.3% in increase of home prices, okay? So, and again, you think we just said 10%, it's gonna rise over the next year. So the 20% is calming down and it dropped by 2 points. But you can see depreciation on the bottom there. Look how big those green bars are. We're still far away from depreciation. Another thing keeping things under control are the lending standards are still really good, and that's keeping the lack of foreclosures off the market by not giving money away to the wrong people. That's a good thing. Foreclosure activity for the year, only 0.4% of homes are in foreclosure right now. Only 0.4 compared to 2.9 million that were in foreclosure previously, okay? So that is a huge difference. Of the 195,000 plus that are in foreclosure right now, 90% of them have enough equity to get out of trouble. So it's not a crisis. So again, appreciation is slowing, not depreciating. Again, the big green bars there are how far above depreciation we are. The red bar on the bottom is when things start depreciating. We're not anywhere near there. There is not depreciation. We're just slowing the appreciation, which is getting more healthy. And don't forget mortgage rates. Compared to the last 5 decades, we're about 5.75 right now. Compare that to the last 5 decades. We're still the second best rates than we've been in the last 5 decades. And most people are thinking, high rates, oh my God, the world's gonna end. So it's not so bad. So home prices are still doing great. If you wanna know what your home is worth, go to yourincreasedhomevalue.com or contact Teresa Lawson, myself, or Heather MacArthur if you would like a free analysis of what your home is worth. And if you're buying, go to buywithmods.com right away to get a guide sent to you. And if you're selling, go to sellwithmods.com to get the latest guide to selling your home sent to you immediately by email. I'm Rich Motz. Have a great day. Thanks, everyone.